So you heard me say many times that I like to buy stocks that people hate and try to sell them when people love them. But a lot of you wonder, what do I even mean by try to buy them and sell them and all these kind of things? Which is why I decided to do this video revealing my most profitable strategy ever. Pretty much, I have been using this strategy for years. I had a lot of success with this strategy. I'm also even going to show you some examples from my own investment group, from my own portfolio of previous trades that I have done in 2023, 3 good ones where this strategy has worked out amazingly well. But I'm also going to show you one very bad one. This was the worst one for the year, that you could actually understand the downside and the upside of the strategy, the pros and cons, and the performance in general. And as I don't actually talk about my performance here on YouTube, but I actually have a video I made in the end of 2022 explaining how I made 27% in the 2022 bear market, implementing the same exact strategy, buying things that people hate, sell them when they love them. It's the same thing, and I also use time-stamped trades like I'm gonna do with this video, with GEO, with CoreCivic, with Crocs, and many others. So you could check out the link here if you're interested. But these kind of videos, they don't get a lot of views. So all I ask is please press the like button and maybe consider subscribing if you're actually new to the channel. Now you need 3 things to be able to implement this strategy successfully, and this is the first thing you need, and this is where most of you are actually going to leave the video, and this is an ugly chart. Now I know most of you and a lot of technical analysts, they like using some moving averages, some support and resistance line, and a lot of other technical indicators to determine when you should be buying the stock and when you should be selling it. And these kind of indicators, they actually work amazingly well, especially when you're trying to enter a long-term position. You could use some of those things to track momentum and try to find a good entry. But in this specific strategy that I implement, I want an ugly chart, some kind of a breakdown, something that scares people, something that will tell all the technical analysts and everyone that I'm not touching this chart. This is when I get very, very interested. So the first thing that you need an ugly chart that most people are not willing to buy. The second thing you need a massive overreaction to the downside, meaning maybe there's some kind of news that comes around the company, maybe they missed on earnings by a penny or two, or they have some kind of legal issues, or some kind of problem, or something. I'm going to show you examples from my own investment group, from my own portfolio. But you have to have some kind of a reaction that was an overreaction, meaning it wasn't warranted. So maybe the stock deserves to go down, but does it deserve to go down 25% in one day on earnings? I don't personally think so, especially if, the news wasn't as bad. But sometimes the market overreacts. It always overshoots to the upside, and it also does the same thing to the downside. We have seen it with stocks like Meta, where the stock went down to like $80 and it just went back to like $250, or was it $300, or some kind of crazy number. But this is what the market does, and this is what I want to take advantage of. I want to take advantage of people's emotions, the difference between reality and expectation. Whenever expectations just go pretty fast, then the stocks start going down, but the reality, the fundamentals are still strong, and they don't warrant a 25 or 30% decline in the same day. I'm going to show you with some examples, but this is what I need. I need a massive overreaction. The third thing that I need, which is actually not something that you need, I prefer to have it, and this is some kind of a catalyst that's going to realize the value. For example, if I'm buying a specific stock that's undervalued with a massive overreaction and ugly chart, it would help if I can tell what is going to be the catalyst that's going to make the market realize the value so you can actually exit the position. This is not a buy and hold forever strategy. This is something I'm looking to buy some kind of a dollar for 50 cents, some kind of a high uncertainty situation with the ugly chart, massive overreaction, goes down 20-25%. People don't want to touch it. Everyone is hating on the stock. This is when I'm interested. This is when I come in. And if I can see the catalyst that's going to change investors' perception, maybe it's a new CEO, maybe some kind of a new product that's coming along, or maybe some kind of a plan that could potentially come in the future. If I can see what's going to be the event or the catalyst that could potentially realize the value, this would be very, very helpful for me to enter the position. This is something that I prefer, but it's not actually required. And before I get into my first example, a lot of you are going to tell me, this is trading, this is not long-term investing, all these kind of things. Because I always get accused of being a trader if I sold a stock in 2 months. But the thing is, whenever I enter a stock, I always have a 5-year horizon. But sometimes the market is generous, especially with my own strategy, because I'm looking for an ugly chart or a massive overreaction. I'm looking for something that's misunderstood. And now the market is a little bit more efficient, which means the market could correct its mistake very, very quickly, maybe in 1 or 2 days. I have a stock, I'm going to show you it just corrected in 2 days. Sometimes it's 2 or 3 months. Sometimes it's 1 to 2 years. So if I sell a stock in 2 weeks because it went up 25% and the market realized the value, that doesn't actually make me a trader, which is why I hope I'm not going to get these comments calling me a day trader or whatever, because I have stocks that I would buy and hold forever and I actually never sell them, mostly micro caps. But I have this strategy which is the most profitable one, and I'm going to share it here in this video in the first example. And this is a company called Sandstorm Gold. This is a royalty gold company that I talked about on YouTube in one of my videos. I said 2 undervalued stocks to consider. I talked about it first and it went up like 20% in 2 weeks. Most of you actually made money with this investment. But I had a second chance on, Sand. And this was around, June 12 to June 13. The stock went down 17% in 1 day. You could see this gap down 17% in 1 day. Now, the main reason it went down 17% was not because the earnings were bad. The earnings are fine. The debt is fine, the management is fine, everything is fine. But the main reason the market freaked out and it went down 17.5% was because they were about to get delisted from some kind of a gold ETF, GDX or GDXJ. I forgot which one, but it was something where they don't meet the requirement as going to get delisted. Now, yes, this might mean that it's not going to get as much inflow as it used to get before, but this is an amazing opportunity if I'm buying something at the right price. I know I'm buying deep value stuff. So in the morning, I started buying Sandstorm, as you could see in the alert, and pretty much around afternoon, 1, 2, 3 o'clock, I was already up like 10%, and then the next day, I sold 10% of my position for like an 18% gain, and then the next day, I sold my entire position for 15%. So we pretty much made 15% in 2 days with Sandstorm, because then the news came out that it's not actually getting delisted, there was some kind of a mistake. So the stock recovered, it was a massive overreaction, and the stock went back, and I made 17% in pretty much 2 days. It was one of my best gainers for the year. Again, that doesn't make me a trader. It was just a high uncertainty situation that I took advantage of. But most people were not buying this dip because it went down 17%. They get scared. They let the price influence them. But I was looking at the value, and I knew that if it was delisted, I couldn't care less. I'm buying this company at deep value kind of territory. What do I care if it gets delisted or not? What if few shares outstanding are trading? What if it gets illiquid? I don't mind at all. I'm buying deep value stuff, which is why you have to look at the value and not much at the share price if you're actually implementing this strategy. But this is not a common one. Now I'm going to talk about the second one, which most of you are familiar with because I got a lot of comments saying, thank you, you talked about this company and you made a lot of money with it. I'm very happy to hear that. But this company is actually CSV, which is Carriage Services. I also talked about it on YouTube, so all these videos, you could go back and watch them. But Carriage Services is actually a funeral home company. And the stock was up a lot in 2021, because unfortunately people were passing away from COVID. And then we had the vaccines and some people got natural immunity and stuff, and the stock started coming down. Why? Because they were comparing 2022 numbers to peak COVID, peak death rates in 2021. I mean, you just cannot compare those numbers. The numbers were looking horrible. Net income was down 50 or 60%. Gross profit was down like 40 or 45%. Free cash flow was down 70%. You could not compare those numbers to the COVID peak. It was pretty much impossible. So the market again overshot to the downside, and I actually started buying the stock around $30 per share, which actually shows you that no one can pretty much pick the bottom. I saw the stock was undervalued. I started buying it around $30 to $31. After that, it went down like 25% to around $23. Then I doubled my position, and I doubled my position again, and then the stock went up a little bit. I sold some, but I kept it, and it went down, and then it went up 37% in 2 days because they had an offer to get acquired from some Canadian company for around $35 per share. So the stock went up 37%, and as you could see in the alert, I got out around a 30% gain in 7 months. Now let me take it a little bit slow. Why did I actually buy CSV? The first one is an ugly chart. Most technical analysts are not going to be buying this chart, especially this is the last breakdown. They will say the stock is done, it's going to zero, and all these kind of things. So this is what I want. I want an ugly chart. The second one was a massive overreaction. The stock around $24 was trading at 5 times free cash flow. 5 times free cash flow for this company. And this is a company that's normally in a very resilient industry because, I mean, unfortunately, people pass away every single year. Maybe they don't pass away as much as 2021, which is good. But they are still, I mean, this is just happened. This is nature. This is what happens every single year. So it's kind of a resilient, recurring business model. And it's trading at 5 times free cash flow. This was music to my ears, which is why I doubled my position and I doubled my position again. And then I sold it for around a 30% gain. So I implemented everything I showed you here. Ugly chart, massive overreaction. I did not know the catalyst. Sometimes you don't need a catalyst to be able to realize the value. Some of those things get acquired, like Capri Holding, which I talked about in my videos. A lot of you also told me thank you on Capri. It went up over 50%. This was also an amazing gainer. But this was my story with CSV. Now I'm going to go into a recent example. And most of you asked me, which kind of defense stock were you buying? Well, the one that I actually bought was Raytheon. And if you look at Raytheon over here, it went down a lot in the same day, a massive gap down from $97 per share. It went down to $83, $82. And this is, again, nothing crazy with the company. The earnings are still fine. They have a huge backlog, much bigger than the market cap. But the main reason the stock went down so much is because of some kind of failure or some kind of engine problem with the Pratt and Whitney division of RTX. Now, to me, I looked at that stuff. I'm like, okay, how much could this cost? So I started looking at previous data and stuff. I found that maximum such cases cost $1 to $2 billion. This is like the maximum. Maybe it's only a couple $100 million. Maybe it's just nothing. So maybe, it's just not defective. Maybe it's just going to cost them $300 or $400 million and that's it. But the maximum is $1 to $2 billion. Now, on this news, RTX sold off $20 billion of the market cap in the same day. $20 billion, even though this kind of whole engine thing, it'll never pretty much cost them $20 billion. So this is how I found a massive overreaction. I done some research and I always liked the company actually. So I opened the position, as you can see in the alert, at $83. Then the stock went down to $82. I added a little bit more, then I added a little bit more. Now my cost base is in the high $82 per share. And now I'm up around like you see how much. I'm up actually around something like 4%. So this is a pretty recent case, but this is what I look for. Now, don't go and copy me because I bought RTX. I might decide to sell it tomorrow. Maybe I keep it as a long-term investment. So this will depend. But this is the things that I'm looking for. Massive overreaction, ugly chart, and hopefully some kind of a catalyst. Now you might ask me, how do you find all these stocks? I just look at 52-week lows. You could go on any screener, you could put in 52-week lows with some kind of positive free cash flow, and then you could find a lot of those stocks that are down so much, and you could start looking into them and see, why is the stock down so much? Is it actually warranted or not? This is how I found CSV. This is how I found Sand. I found them on just a screen and looking at 52-week lows. All these stocks performing so bad and they're profitable. So I started asking why. Why are they going down so much? Is it actually warranted or not? This is also how I found Capri, which a lot of you made over 50% with something like Capri because it's getting acquired. So this is how I found these things. I look at 52-week lows and I also look at the losers of the day, the stocks that are down the most in the same exact day. And this is actually how I found RTX. Now, I showed you all these examples. Maybe your head is blown. You might think this is the best strategy in the world. It's something amazing, something that most people don't talk about. But this strategy also has a lot of, disadvantages, a lot of downsides that could pretty much wipe you out. And this was my experience in 2023 with a company called Lumen Technologies, ticker symbol LUMN. Most of you are familiar with the company. It's pretty much an absolute disaster of a company. But again, I saw an ugly chart. I saw bad sentiment, and I actually saw a catalyst because whenever I started buying Lumen around $5 per share pretty much. Actually, Lumen at $5 per share was trading at the same price it was trading at in September of 1988. So this is how much of bad sentiment Lumen actually had. So I started buying Lumen around $5 per share. The main reason I started buying it is because they had a new CEO. Her name was Kate Johnson, and she's coming in from Microsoft. She's focused on growth and debt repayment. This is what she said before the first earnings call. So I said, this is amazing. There could be a new face for the company. company, new management, new plans, and then maybe Lumen can start growing again. I thought this is pretty amazing. This could be the catalyst to change the sentiment and realize the value with Lumen. So this was my thesis, and the stock was very undervalued. They had a lot of very valuable, tangible assets, a lot of equipment and stuff. So I said, all right, and I started buying Lumen at $5 per share, and we were going into the first earnings report, first earnings call for Kate, which was the new CEO. So as we were going into 4 o'clock, it was like 350 or 352. I kind of had a bad feeling going into those earnings. And this is very hard to explain. A lot of people on YouTube, and especially in my own group, they ask me, how do you time these stocks so perfectly? How come when you always buy, the stocks go up? How come you sell at the perfect time? I don't have any technical stuff I do. That just doesn't always work out. But I just have a feeling on when something is not right, on when I should actually buy, or when I'm doing something wrong, or when I should actually sell. And this is hard to explain. But if you do this for at least 4 or 5 years, you start developing some kind of instinct. Or if you just know when to sell without even thinking about it. You just go and do it. It's the same thing if you're driving a car. You press on the brakes without thinking, oh, I have to press on the brakes, because you've done it so many times. So it's very hard to explain, but I just had a bad feeling going into those earnings. So I issued an alert, and I said I'm going to sell off 30% of my position around 353 or 354 before I get into the earnings call. So I sold off 30%, and then I bought puts on Lumen as a hedge. Now, I don't encourage you to actually go and blindly do this, because if you buy the wrong option, even if you're right and Lumen goes down, you could still lose money. So I bought it as a hedge. Normally, I buy the put options. They are closest to the strike price, and they are the closest dates, pretty much 1 to 2 day expiry, and the closest one. So once I bought those puts, Lumen went down 28%. These puts were up over 400%. They offsetted pretty much 95% of my losses. I was still down around 5%. A lot of the people in my own groups, they couldn't believe it. They told me this was a master class, because we would have lost 28% in one day. The stock went down massive. And the reason it went down was because Kate was not focused on paying back the debt. She was focused on growth and all these kind of amazing plans, like she's running Microsoft or some kind of a tech company. Lumen needs massive debt repayment before you go and invest for growth, which is why after I cut my losses around a 5% loss, I exited Lumen around $3.85 per share. Now, this is when my experience comes in, because I've seen this before. Most people would hold Lumen because they don't want to take a loss. They cannot admit it, and they want to hope that Lumen would actually come back and they can sell for break even or some kind of a profit. Now, from me looking at Kate's plan, I knew that Lumen would not come back, which is why I exited around $3.80. And after I sold around $3.80, now the stock is sitting at $1.71. So this would have pretty much wiped me out. It would have wiped out my entire gains. I would have lost 50 to 60%, which is why the strategy is very, very risky. You need some kind of experience. You cannot have any emotions and being attached to a certain company. You cannot have an ego and not accept to take a loss or accept to make a mistake. This is not how you succeed doing this strategy. But this is not the best strategy in the world, because you do pay some more taxes. There's a lot of getting in and out. This is not something I want to do for the rest of my life, which is why I've been switching to more of a growth at a reasonable price strategy, kind of like Warren Buffett, but with more kind of the micro cap stocks, small to mid caps, some kind of micro caps that are growing. I have like 5 of them. And these are stocks that I buy, I pretty much hold for a very long time, because they can actually grow into the valuation. So it's some kind of $1.25 for $1, but this $1.25 is actually growing. And this is how I think about this whole thing with Lumen and all these strategies. So this was my most profitable strategy ever. I hope you don't take this as financial advice. And if you have any questions or anything, I mean, if you could want to join my own investment group, you could ask people. They have been there for 1.5 years and they did everything I did. So it's 100% transparency. But I did share that with you here on YouTube. Again, I hope you enjoyed it and you learned something. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.